Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we clearly got the market in risk-on mode. The animal spirits are alive and well, especially after these last 2 weeks. We'll take a look at the SPY today, look at a couple of key indicators, get an update on the High Yield Bond Fund. So the Dow Industrials up 670 points this last week, 2 weeks in a row. Yeah, it's sitting at a new closing all-time high on a weekly basis. S&P 500 up 76.5 points. Same thing, sitting at a new all-time closing basis, all-time high on a closing basis for on a weekly closing basis. Easy for me to say. And then when we look at the NASDAQ 100, not so much. It's the laggard amongst the three here. Hasn't nearly bounced back to the degree that the S&P or the Dow has. The Dow is kind of leading to the upside here. It was up 277 points this last week, and yeah, 2 weeks in a row, but again, clearly being kind of dogging it a little bit. All right, let's take a look at the SPY. So down 273 on Friday, and up 6.24. I guess I didn't mention that when I was doing the comparison because I had the SPX on the screen. Now, these little numbers I've got up in here, this is where I keep track of Tom DeMark's sequential sell setup and his sequential sell countdown complete. We're not quite there. We're at a +9 as of the close on Thursday. Okay, so let's take a look at the Elliott wave picture. Now, let's just go to the weekly, have the bigger picture. I think, we've got, using the rule of alternation, I am leaning into the fact that I think that this minor wave 4 was complete at the low on August 5th. We've come up very strong. We've taken out the highs, taken out the mid-August highs, taken out the July highs. We continue to push. I am looking for this to continue to push higher up in here and finish off this fifth wave. So where do we sit when we look at the daily view in here? This is what it looks like to me, okay? Looks like 1, 2, like we're in a third wave. Up in here, if I had to target, I would say this is going to be pretty close to being up in this range. We'll see what kind of wave structure we get in here. I like the way this is broken out of a trend line here on the RSI. So right now, I continue to look for this to continue to push higher on the SPY, the SPX. Let's take a look at a couple of the indicators. Well, number one, let's look at the VIX. And you could see the VIX is basically saying, yeah, there's no fear in this market. We're just chilling out. Let me go to this view. This is one I like to use. So we're down 18 cents for the day on Friday, down 41 cents for the week. So we've come down. The blue line is the 10-day moving average on here. We come back down below it, we get out, we come up during the midweek and close above it for 1 day, and then we collapse back down Thursday and Friday, and now the moving averages have flipped to the downside. This doesn't look like there's any turn in place as far as I could tell. I mean, this may be getting ready to head back down into the basement for all we know. Right now, I mean, now if the market continues to push higher, this is going to continue to go lower. There's just no doubt, and that's what I'm looking at right now. Let's take a look at the McClellan oscillator. So the oscillator looks at a lot of breadth in the market. Friday, there's negative breadth. 34% of the total of advancing and declining was advancing. That was it. So the reverse of that, 66% was declining. Okay, and when we look at where's the oscillator sitting, it's sitting at a +66. Which is just very, very slightly overbought. I mean, I think of kind of a plus and minus 50 as a neutral zone. This is just ever so slightly overbought. Now, the summation index is a cumulative of the oscillator. Look how this has been trending higher and continues to push to new highs in here. We're sitting at a plus, see if I get the number right here, if that's right. I've got a 36.16. There we go, right there. Okay, so this is the second highest reading. You got to go all the way back to January of this year. This is higher than anything we've seen during the year, except back at the beginning in January. So this to me is confirming the strength in the market and the move that's going pushing higher in here on the indices. Now let's take a look at the high yield bond fund. I talked about HYG 2 weeks ago. Okay, and I talked about this resistance zone up here that I had identified. Let me go over to the weekly. This was up 10 cents on Friday, up 63 cents for the week. So look at this weekly view. So I had identified prior peaks in here in May of 22, August of 22, and said this looks like a potential resistance zone that we need to get through or close above to kind of confirm, the risk on mode. And that's exactly what it's doing right now. Okay. We closed above it just ever so slightly on Friday because the top end of this was what? 80.19 and we closed at 80.26. So we'll see. I mean, there's no clear blue sky above this level. I mean, you're going to run into, little resistance pockets if this continues to push higher naturally. But right now, it sure looks like animal spirits are alive and well. All right, that's it for this video. If you felt like it was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you want a lot more of this information, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week.